Let's say it's 2026. You're a global investor scanning the world for growth. For the past 30 years, the answer has always been obvious. Asia. China, India, Vietnam, Indonesia. That's where the world's fastest economic growth has lived for decades. But this time, something looks different. Because for the first time in modern history, Sub-Saharan Africa is projected to grow faster than Asia. According to the International Monetary Fund, African economies are expected to grow about 4.4% in 2026, up from 4.1% in 2025. Asia, meanwhile, is projected to grow around 4.1%, as China's long-term economic slowdown begins, weighing on the region. In a global economy expanding closer to 3.3%, Africa suddenly stands out. Even more striking? 11 of the world's 15 fastest-growing economies are expected to be African. But to understand how Africa reached this moment, we need to go back.
Welcome to Spotlight in Africa, where we provide the clarity, data, and intelligence investors need to understand Africa's evolving markets.
For most of modern economic history, Africa was not considered a global growth engine. The continent's economies were often shaped by commodity cycles, political instability, and limited industrialization. While Asia was rapidly industrializing and integrating into global supply chains, many African economies were still navigating structural challenges. Meanwhile, Asia was transforming the global economy. Manufacturing hubs expanded, exports surged, and countries like China became central to global trade. For decades, Asia dominated the world's growth story. But beneath the surface, Africa's economic foundations were slowly evolving. Urban populations were expanding. Mobile technology was spreading rapidly. Regional trade was beginning to deepen. And gradually, African economies started to stabilize. Then something changed. Several global forces began moving in Africa's favor. Commodity prices, especially gold and copper, rose significantly. For many African exporters, that meant stronger revenues and improved trade balances. At the same time, inflation pressures began easing, helping stabilize domestic economies. Another factor helped too. The US dollar weakened, easing external debt burdens across many emerging markets. This combination of forces improved fiscal space across the continent. Governments faced lower debt service pressures, external balances stabilized, and countries gained more room to support domestic demand and investment. In other words, while many regions faced tightening financial conditions, Africa's macroeconomic environment was quietly improving, and the numbers began to show it. Several reform-oriented African economies are now sustaining annual growth rates between 6% and 7%. Countries like Ivory Coast, Senegal, Rwanda, Ethiopia, Ghana, and Uganda are all maintaining strong momentum. In some cases, this growth continues despite political uncertainty or external shocks, but the trend is clear. Across multiple regions of the continent, economic expansion is accelerating, and in some places, the numbers are even more dramatic. Take Guinea. Large-scale mining investment is pushing projected growth to around 10.5%. Meanwhile, South Sudan is projected to grow about 22.4%, driven by a rebound in oil production and exports. These are some of the fastest growth rates in the world. But Africa's momentum isn't just about commodities. Something deeper is happening. Across the continent, several structural shifts are strengthening growth. Policy credibility is improving in many countries. Regional trade integration is expanding. Private investment is increasing, particularly in energy and services. And African economies are becoming more integrated into global value chains. These developments are helping diversify growth beyond traditional commodity sectors. But there is one factor that may shape Africa's long-term economic future more than any other: demographics. By 2050, more than 1 in 4 people on Earth will be African. The continent is also projected to have a larger working-age population than China and India combined. That demographic shift has enormous implications. A rapidly expanding workforce can drive productivity, innovation, and consumption if economies can create enough opportunities. And that's the real question now facing Africa. Today, Africa's economic momentum is becoming harder for the world to ignore. Growth across the continent is accelerating. Commodity markets are supporting export revenues. Macroeconomic conditions in many countries are stabilizing. And across multiple sectors, from energy to services to infrastructure, private investment is gradually increasing. For now, the continent is expected to host 11 of the world's 15 fastest-growing economies. But the bigger story isn't just short-term growth. It's the long-term structural shift that may be unfolding. By 2050, Africa will account for more than 1/4 of the world's population and is projected to have the largest working-age population globally. For investors studying global markets, this combination of demographics, urbanization, and economic expansion is increasingly important to watch.
Growing populations tend to drive demand for housing, infrastructure, consumer goods, financial services, and technology, all sectors that shape long-term economic development.
As African economies continue to integrate into global supply chains and regional trade expands, the continent's capital markets and investment opportunities may also evolve. But like any emerging market story, outcomes will depend on how effectively countries convert growth into productivity gains, job creation, and rising incomes. If those conditions continue improving, Africa's recent growth momentum could mark the beginning of a much larger economic transformation. And for observers of global markets, it's a region that is increasingly difficult to overlook.
For more intelligence on Africa's economy, finance, and capital markets, subscribe to our channel at Spotlight in Africa.